Hi everyone, welcome back to my channel. Today I'm continuing part 3 of a series where I discuss the exact entries and exits I take as I trade throughout the day using a combination of smart money concepts, volume price analysis, and market maker positioning data. Before we get started, I'll leave several discount codes for trading services I use in the description, including Sonar Labs, TradingView, and Elite Trader Funding. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. With all that being said, let's get right into it. Today I'm going to be talking about, well, first let me talk about what we've already went through in previous videos. We went through multi-time frame order blocks, high volume node ledges and value areas in POC using volume profile, and now we're going to be talking about using the VWAP and gamma levels. So one thing I want to note is that candlesticks and volume are going to be used with all of these concepts. So all entries and exits will always be leveraging candlesticks and volume. That's how we determine things like stopping volume, or if we're going to be able to get a good entry. And future videos we'll also be talking about TradingView dealer diary, which is some specialized trading that we can do, and then some swing trading concepts as well. So before we continue, I just want to point out, always keep market awareness in mind. So we always want to have an idea of what upcoming market events there are. We want to watch the VIX, ADD. We want to watch the S&P 500 sectors, or if we're trading a particular holding, watch that particular tendency to keep our finger on the pulse of the market. I like watching market net flow, which is options flow data, to get an idea of overall market sentiment. And there's other things people can watch, like bonds, T-notes, treasury yields, tick, UVol, DVol, etc. But I prefer market net flow with a combination of VIX, ADD, and sector awareness. So I've done lots of videos on these sort of things, so I won't cover it further here, but make sure you check out those videos. Now, in this, we'll start with talking about VWAP, and a lot of people use VWAP in a lot of different ways. I've had the most success with VWAP when I use it as a dynamic level. I've heard some people say that they only look for shorts when price is under the VWAP and longs when it's above it, and I don't necessarily agree with that. For instance, up here we can see we had a clear topping pattern, and this did actually correspond with some higher time frame order blocks and things like that, which led to a big fall where we ended up blowing through the VWAP and continuing down for the day. So you'd miss fantastic entries like that if you purely used VWAP in that fashion, but instead I like to use it as a level. So what I mean by that is, you can see down here, as we push higher, we create an order block, we come back, we retest that order block, and we get up to VWAP. It looks like we're gonna blow through it. However, a lot of institutions and even retail traders will fade that VWAP. And so this would act as a perfect take profit point. So if we took longs off this order block, we could take profits at the VWAP. Now the thing is, we do actually come down and retest the new order block that was created here, and then we proceed to blow through the VWAP. But we could again take profits here, leave some runners if we wanted to. And when we get through that VWAP, this is what I really like. When we retest, when we're trading with character, so we know that we're in an uptrend here, and we test that VWAP with that one wick, and we get this high volume wick confirmation, and we just proceed to move higher. These are optimal VWAP entries. Now, at this point, when we actually have a change of character and we created a new low, and we have this topping pattern where we reject and we start blowing through the VWAP, we can see that limit orders here were being triggered left and right, people trying to buy. And when we see this sort of thing where price is still continuing down, rather than what we saw over here or in other instances I've highlighted on this screenshot where price rejects and then continues as is, when we see this sort of situation where the VWAP is trying to give a response and completely failing at that, that is a sign of market strength. This is a sign of seller strength, where we see not only character shift, we see a change of character, but we also see the VWAP, all these limit orders that retail traders are using, and even some institutional algorithms are using to hold that VWAP, are failing very badly. And this is a confirmation that we can actually, if we took some profits off, we can keep our runners on, or we can even decide to get back in that trade as we actually start to get through the VWAP, because we know that we'll get more out of it. And then when we come back to that previous order block, we hold again, reject off that VWAP, and then continue lower. Now, if you're not familiar with what I'm talking about with order blocks, be sure to check out part 1 of this series. It's a very powerful concept I use in everyday trading, and it will help you tremendously. So this is another example of using that VWAP. So this is again ES on the 1 minute chart, And we can see that as we come up to the VWAP, we get these candles with these wicks, these topside wicks, showing that there are orders sitting at this VWAP that are likely going to push us lower. So when we see this first rejection, and we see it on ultra high volume compared to the relative volume of that time period, that is an indication that there are strong sellers there. Now it looks like that we're going to get pushed back up. And at this point, this is where we want to set a limit order. And that's how I do it. I set my limit order within the previous wicks, so a little bit below the VWAP, because I do want to get picked up because it's a high probability trade, especially if things like market net flow this day are showing bearish flow. It's even more confirmation. We're seeing VIX in an uptrend, for instance. Extra confirmation of our shorts, and then we can set our stop loss a couple points. I usually do 2 to 4 points above the VWAP if I'm trading ES. The point is that the points aren't an exact science because it depends on what you're trading. For instance, with NQ, 2 to 4 points is not that much. Same with YM, whereas with ES, 2 to 4 points can be significant. But I always make sure I give a little bit of breathing room in case some sort of big money wants to play a trick, just to trigger a bunch of stops that are directly above it before moving lower and doing liquidity stop hunting, which is something they are notorious for. So this is a clear-cut way to use it. And just in case you're unfamiliar with the VWAP, I know most people watching this are probably familiar with the VWAP. This is the indicator. I just use the standard VWAP indicator. I hide it on the daily or above because I don't use it on the daily or above. I actually prefer to turn off the bands. I only like using the VWAP itself. I've seen people have success with the bands. I myself have not. I prefer to use order blocks and volume profile over any VWAP bands. I've tried them a lot in the past, and it's hit or miss with the success rate there. So anyway, the VWAP itself is a very notable indicator, and it's almost like a self-fulfilling prophecy. And what I mean by that is there's so many algorithms and traders that use the VWAP as a level that it's bound to give some sort of reaction in some way. And it's just a matter of reading that reaction, reading the candlesticks and the volume to get an idea of what that reaction is telling you when it happens. Here's another indication where we push higher and we can see that we reject off a previous order block that was created and then move back lower below the VWAP. But we can see once we broke above it, we could have taken a long position here and held into this prior order block where we could then exit our position and reverse it at that point and take profits again at the VWAP and then re-enter on the next retest. So just by using this VWAP in this small period of time, we have a combination of 1, 2, 3 successful trade entries and exits we could have taken by doing a simple combination of order blocks and VWAP. So that's how I prefer to use it. It's a powerful tool. Like I said, people get more sophisticated with it, but it's just part of my overall strategy. Now, the other thing I want to talk about how I use entry and exits is using gamma levels. Now, you'll need some sort of third-party tool for this. I love TradingView. I use GEX, which I've done numerous videos on, so I'll make sure that I reference them in this video. I'll have a little pop-up for it, but make sure you check out my GEX video to learn more about how to use these. So one thing that we can do here, and let me just actually pull up trade. I should have had this ready to go, so I apologize for that, but we can actually export these TradingView levels. So when we're looking at the chart, we can see the red, if you're not familiar, the red levels indicate where we're going to see market maker selling at, and the green indicates where we're going to see market maker buying at. And it's important to note that that's as we approach the level. So we can see here as we are approaching this gamma level, we're going to get assistance from market makers with buying, and it's almost like a magnet. And between these levels, it's what TradingView calls ghost zones. There's not a lot of market maker activity, so price can move pretty fluid between them. Once we get to the level, however, they act as reversal points, and that's how I use them primarily, is not only get an idea, okay, we're pushing towards a green GEX level. I can assume that market makers are going to be buying shares or buying futures or whatever to help push towards that level. So therefore, I am more confident when I take my long entries out of order blocks or volume ledges or VWAP or whatever it might be. However, once we get to that level, this is where we're going to be looking for key reversals based on the strength of that gamma level. And GEX makes it easy because it shows us purely the most notable ones. So what's very nice about this is that we can actually export these levels to TradingView. And I did do a video on this, so I'm not going to show how to do it here. It's very simple, but you can just go in and you can export those levels. And then once you do, and actually let me make sure that I copy some of these levels myself, you can go into TradingView and copy these on your chart. Now, as I mentioned here, that they can act as key reversal points. So if I pull up TradingView, I already have my TradingView indicator on here. There have been people in the community that have made one that works very well with futures, but I'll show you another way we can use those with futures. So if we just drop volume profile here, and I'll drop VWAP so we can clearly see this, and let's go to the 30-minute chart here on SPY, and I have my custom TradingView indicator. I'm going to turn that on, and we can see, I'll paste in the latest levels to see how that looks here. So we'll say copy to TradingView, and we'll pop that in. And so here's the current notable spot GEX levels. So again, on the way to these green levels, we'll be assisted by market maker buying. On the way to the red, we'll encounter some market maker selling. When they're real close like this, they sort of can cancel each other out. However, they do act as key levels and points where we do see price reverse off of. So we can then turn on all of our other tools that we've talked about. So we have VWAP, we have our volume profile, we can turn on our Sonar Labs order blocks and things of that nature, and use these in combination, knowing that as we trade off of order blocks, and I'll drop down to a lower time frame here just to demonstrate that. But as we trade off of these order blocks, as we get to these big gamma levels, we're going to start looking for rejections off of those levels that we can short off of. And then as we fall down into order blocks, we're going to look to take longs back up to those levels, especially if it's a green level. That means market makers are buying there. If it's the red, we have to be a little bit more leery, but market makers can be defeated. Their levels get defeated all the time. So this was a very bullish day, and therefore this red spot GEX level was defeated despite the market maker selling that occurred there. Now, as we came back down into it, that market maker selling certainly helped. And this is the end of day levels. I don't know what this looked like earlier in the day, unfortunately. But so as of now, it's a red level. But we can see that these sort of act as boundaries for us. So as we know, when we touch these levels, we're going to have some big reaction. And that's how I primarily use these gamma levels, is I look for big holds, key reversal points, and then I play order blocks and volume profile, volume gap ledges that I talked in part 1 and part 2 of these series alongside those. And just so you know, you can actually convert these to ES. And just to show that briefly, what I like to do is I'll pull up SPY's chart and I'll pull up ES's chart side by side. And what we can do is turn on our TradingView gamma levels, and let me actually just turn off everything else so we can see it here. And this can be a little tricky to line these up. It's not, this isn't the ideal situation. TradingView does have SPX data coming soon, which is very nice, which I'm really looking forward to here. But if we go to a higher time frame and we go to the 30-minute, and we line up these charts, and we just want to make sure we put them side by side. And since the price action is going to be the same, we can see here that we can draw. And so I've already drawn these gamma levels. We can see based on this wick and this wick right here, we had a rejection. So I drew, it's a SPY bullish gamma level. I drew the bearish and the bullish gamma levels. And then down here, there was one earlier on ES that no longer is showing on SPY here. But the key is to make sure you look at the particular price action. We can see we have another one that occurred right around here, and you can get an idea of how to put those levels side by side essentially. And they do usually, one trick that a lot of people don't realize is that, notice here when I put this is 38.44. Well, what this actually corresponds to is 38.50 on SPX. However, with futures, if you subtract 6 from it, so the gamma level is technically 38.50. If we look at SPY, that corresponds with 380, which is typically a big gamma level. On SPX, it more based on the price action, it actually correlates better with 3850 than it does 3800 because it's not just a flat times 10. But if you're talking about futures, you can subtract that by 6, so 3844, and that will be our big gamma level. So what I mean by that is 3900 typically would be another big gamma level. However, if we're referencing that on futures, instead what we want to do is put, and let me just draw another line here. We want to, instead of putting it at 3900, we want to put it at 3894. And that will more than likely be a big gamma level for us. And then we can actually keep doing that all the way up. Doesn't always mean that we want to always make sure we compare to SPY, because it doesn't necessarily mean they'll react at that point. But you can see it does usually work pretty well. Now, we don't know if that's going to cause market maker buying or selling, which is another reason why we need to look at SpotGex when we're adding these in. But that's how you can quickly add them into futures at these $50 increments on ES. You just subtract 6 from it, and you get an idea of where that big gamma level will be. And you can see it actually worked very nicely here, just by adding those in. And then we can use SpotGex to say, okay, this level is going to incite market maker selling or market maker buying to either assist or help hinder the move that's being made as we move towards that level, if it's going to act as a magnet or not. So that is how you can put those on, and you can do the same thing with QQQ, DIA, IWM. If you're trading the futures version, just make sure you look at them side by side and try to line it up with the price action. And the other thing you can do is, now this isn't going to work well because this is in the after hours, and I don't have after hours data on SPY in my TradingView. But if it was during normal hours, and if SPY was trading at 365, so we'll say SPY was trading at 365.35 at the time that ES was trading at 3677.50, let's say 3677.50 divided by, what was I said? Did I say here? So we said roughly 365.45. You can get okay, so it's 10.06, and so basically, if you take SPY's current price and multiply it by that 10 times multiply it by 10.06, then you'll get an idea of the ES level, and you can do that with the other gamma levels. So with this one being at that 3372 level, we could say multiply that by 10.06, and that will give us 3742, and based on what we just talked about, we actually would more than likely be 3744 because it's an ES level. So hopefully what I'm talking about here makes sense, but it is how you can translate these SPY gamma levels over. But as I mentioned, very soon TradeAddicts will have SPX data, so we can go into the stock dashboard and we can choose. This is still populating because they recently added SpotGex, they recently added SPX data, and actually it looks like it does indeed have it. So we can do this test right here, right now. If we pull up SPX here, and we go to the indicator itself, and we paste in those exported SpotGex levels. Okay, well, there we go. Yeah, so it does have it on SPX, which is actually really nice. So I'm going to actually start using that because it will be much easier. It's still not an exact one-to-one to futures, but it will be much easier. We can see that even the crosshair lines up properly because of the price points on SPX and ES are very, very close to each other. They're not exact, but they are very close. There's usually about a 6-point difference from time to time. So that's actually probably the better way to use it. The way I was showing you before is sort of the old method. So anyway, so some gamma level tips basically is that we can use SpotGex for simplicity. So red equals market maker selling, green equals market maker buying as we are approaching the level, not once we are on top of it. We can update and export the levels periodically throughout the day to make sure that you catch any changes if there are any. We want to always use candles and volume for confirmation. So hammer, shooting stars, spinning tops, engulfing candles, dojis on high or ultra high volume. For entry confirmation, we can combine them with order blocks and volume profile for very powerful sniper entries. And we want to always make sure we don't just assume a gamma level broke until we not only get a break, but also a retest and rejection or hold of that level. And then keynote is large gamma levels often act as areas of reversal points or price magnets as we approach them. And we want to make sure that we watch for change of characters or trend shifts when we hit those levels. So anyway, I hope you found this helpful, and I appreciate you watching.